Good morning, everybody. Welcome to this coffee talk with some super smart credit union leaders. We're so excited to be having this conversation today. As everybody's joining, just a reminder on the mechanics of Zoom. You'll be on mute. Use the Q&A or chat your question if you have questions as we go through. We want to make sure this is interactive as possible, as feasible on a big group session, and so the chat and Q&A section is a great way to do that. We'll do a quick round of introductions, and then we'll do a poll to get some feedback before we get started with this discussion. So for those who have not met, my name is Dan Marks. I serve as the president of Infusion. I'm joined by Tim Keith, who is the CEO of Infusion Marketing Group, Amber, and Bill. And so I'll let Tim introduce himself first, and then we'll have Amber and then Bill introduce themselves. So Tim?
Hey, everybody. Good to be with you today. Stan said, CEO of Infusion, founded the company almost coming up on 19 years ago, and have worked with hundreds of credit unions over the last couple of decades on the type of stuff we'll talk about today. Also a former banker. Dan and I worked together at First Tennessee and First Horizon. So it's great to be with you again today and look forward to our discussion.
Awesome.
And good morning, everyone. I'm Amber Callahan. I work at First Advantage Federal Credit Union, and I am the Chief Revenue Officer here. I oversee marketing, business development, and I've been here almost 10 years now. We are located in coastal Virginia, and we're community-based, fielded membership, and we're kind of Richmond all the way through down parts of North Carolina. Just over about $1 billion in assets and 71,000 members. We're predominantly consumer-based. About 98% of that is consumer. And then we have partnered with Infusion, been clients for 6, maybe going on 7 years now. And so I'm excited to share my experience with you all today.
Thanks, Amber. Bill?
Hey, good morning. So Bill DeWitt, I'm head of member delivery and marketing at People's Credit Union. So I oversee marketing, retail, deposit services, our online banking, core, and facilities. And we are located in Southern Rhode Island, so Newport area for the most part. If you're familiar with Rhode Island, we're about 800 million in deposits.
Yes, fantastic. Well, great. And so I'm going to fire off a poll, and I always have to concentrate, so I cannot chew gum and ride a bike at the same time. But we want this to be an interactive conversation, and so this is a great way to just get the pulse of everybody on the phone. You should see the poll questions on your screen. We're asking you to rank order the best you can on just your priorities related to deposit growth. And so the idea here is to put 1 in the highest priority and 5 in the lowest priority. And if there's a tie, don't worry about it. You might have multiple 1s, and that's fine. But to the extent possible, you can rank those. That'll be good. And we'll just pause here and let most folks weigh in. And then that helps us all as we're having this discussion, this coffee talk, to make sure that we're touching on the things that are relevant to you who have invested time this morning. So I feel like the kind of Jeopardy host. We could have the soundtrack. You don't want me to provide the sound effects on that. Give folks just a second more. Looks like the voting has slowed down. All right. I'll end the poll and share the results. Yeah, so The first one is really not a surprise. Looks like the clear number one priority for most folks on the phone is that core checking or primary relationship growth. But then a little bit of variation. Looks like some participants balance growth, cost of funds reduction, and then new to bank acquisition and retention. Actually, new to bank, it looks like it has more number one votes than even cost of funds. So yeah, good stuff. I think the discussion that we've got teed up this morning will be very helpful from some of your peers. So let me stop sharing that, and we'll close the window so get out of the way. And so as we get rolling, Bill, since you're off of mute, we'll let you start. What has been your focus related to deposit growth?
For us, it really has been around trying to build that primary relationship. As a credit union, we really feel that is the mission. We need to do it at the right margin, but we really are looking, to extend what starts as a lending relationship with most of our members, into more of a primary financial institution relationship.
Cool. Amber, how about you?
Yeah, I would say we are not unique that we follow suit, and we've really kind of built upon that, and we've ensured that to get the best rate, either on the loan or even on the deposit side, that we've built in a relationship pricing component to encourage that relationship and winning the full business there.
Makes sense. And is that focus kind of shifted over time, or is that?
Yeah. So, we, again, probably not unique. We all have challenges when it comes to core and what you can and can't do. And we've wanted to stand up true relationship pricing for many, many years. But the core has been a challenge, just system limitations and capacity to do it. And so as we were building out new products or even just setting rates, say on a certificate, we would, to get the highest rate on, say, the certificate, we would require that you had a checking account with direct deposit. Would love to tell you it was sophisticated and that the core checked that, but we just did a spot check with human eyes, and we've had success. We go back and ensure that they truly do with some spot checking, just always inspecting what you expect. But we have folks that are going into the non-direct deposit certificate. But of course, with the bulk going into the one designed around the relationship pricing.
Makes sense.
And I guess we've probably been a little freer with that, as far as the managers have some discretionary pricing that they're allowed to provide, but typically that requires the fuller relationship. So for us, it's really more a conversation in the branch than a system check or a product set.
Makes sense. Well, how did you guys identify opportunities to support those priorities and even prioritize tactics around those opportunities?
Yeah, I'd say, when we're identifying opportunities, we're always really trying to stay closely connected, both to what the data is telling us and what members are telling us. So, it really starts with listening, tracking any shifts in member behavior, product usage, service engagement, all through the data, and then frontline feedback, member surveys. And then, so from there, we're really looking to align that insight with our overall credit union goals and needs at the time. So for example, we show to have very strong checking account penetration with our members. But we saw that we had an opportunity to capture more direct deposits. That was not, that metric wasn't so strong. And so we really put a focus on that, not only from product build, like I had mentioned, with tying it into getting the best rate on the either loans or deposit accounts, but also we've put it as a metric on colleague scorecards. So it's something we're measuring, we're tracking, we're rewarding on, and that's been a huge success in capturing more direct deposits and really strengthening those relationships and keeping it top of mind for colleagues to ask and to seek out.
So I got to the credit union, I guess, 5.5 years ago. And when I got here, they were doing a kind of a saturation checking program. They would take a checking account from anybody.
Yeah.
And it was, very high churn, very high turnover. Not much of it was sticking. But they felt like that's what they needed in order to get, continued, member acquisition. And, frankly, it was a couple of conversations with colleagues where we tried to better understand not just what was in our portfolio, but what should we expect, right? What do our peers look like, and how different are we from our peers? Because that helped us understand, what perhaps the real opportunity is, right? I mean, you can get 100% of everybody's business, perhaps, but what do our peers have? Where are we relative to our peers, and where are there opportunities? That we should be able to take advantage of. So it was that data journey and knowledge of kind of what the norms out there were that helped us determine where we wanted to go.
Got it. Yeah. And so talk to more about the norms and how did that feed into the planning process?
Yeah, so I would say for us, access to data, we've got tons and tons of data as a credit union, right? But a lot of times accessing it, utilizing it, getting it in a format that is actionable can be very challenging. And so really a huge benefit from where I sit, our benefit with our partnership with Infusion has been the opportunity assessments that we do each year. And so you all really do the heavy lifting on getting that data into a usable format and also then adding in the normative so we can see how we compare to peer. And so we use that. Again, it's great to see where we are each year at a moment in time, but then also to string the years together and see if there's any trends that we need to address or areas of opportunity. So we really use that to then influence our strategies that we're working on. And so, for example, I want to say, I think it was our last opportunity assessment that we did last October showed that we continued to have really high penetration in our deposit accounts, but our balance index fell below the norm for money markets and CDs specifically. And so that was an opportunity to fund up those accounts. And so, we worked with our strategists to come up with campaigns and how to present those offers and who to target. And so by overlaying that data and then making it actionable, we've, over the past, I think, 3 campaign cycles, we've seen about a 2.5% response rate and increased balances of just that target audience of about 20 million.
Oh, awesome.
Yeah, and I'll also add that we are not top of market on our rates.
Yeah.
We've been really fortunate that we're really strong on liquidity. We want to be competitive, but we don't have to be top of market. And so we're able to grow deposits and have results like that without being top of market and keeping our cost of funds low.
Yeah, sure.
When we first did the opportunity assessment, we were on a parallel track trying to roll out a data warehouse. So the opportunity assessment kind of came out first, and now the data warehouse is catching up. But it was a great way for the CEO, for the CFO to really get a sense of what our portfolio and relationships look like, and on an annual basis. I mean, they get excited about the opportunity assessment because for them it puts it in a really kind of standard format compared to peers, and it's not marketing doing some pretty slides, and I can say that because I'm in marketing, but it's really data that's been through the ringer, and they find it incredibly credible.
Yeah, I would echo that. I mean, I think, Bill, that's a great point. So whenever Infusion comes in and does the opportunity assessment, it's not just marketing in the room. Like our CFO, our CEO are wanting to sit in on that because the data is so great.
Yeah. And you talked about how some of that is the context of data warehouses, those kind of things yourself, but it's providing context. Can you sort of tell more about sort of the benefits you get from the context and how that helps prioritize, kind of drives the prioritization discussion?
Well, I guess, go ahead, Amber.
No, go ahead.
I was going to say, for us, it starts with the opportunity assessment, and then we can then drill down into our data, to pull out other segments that, that we can look at for other activities, right? Because the omni-channel marketing that we have going on, we don't want to interrupt that, but we can layer over other activities, to try to hit particular areas.
And I would just add not only just that for us as well, but also taking that data and looking to see if potentially, product design. We just recently stood up a high yield set for high yield checking and high yield savings. And some of that was driven from the data we were seeing in the opportunity assessment.
Cool. So yeah, that's taking that context and saying, okay, and that probably goes back to the balance insight for AHA. Yeah.
I mean, and I would say we don't, given our size, we don't have product managers, and I started my career as a deposit product manager. So, I mean, I look at the team, at Enfusion as, my advice and counsel on, they helped us design, a high yield money market account. They've helped us design a number of our offers. Just, they see a lot more than we do. And it just saves us a lot of time, trying to figure out what we should be doing, because they're seeing so much.
Yeah. Well, thanks for saying that. That's one of the things we enjoy doing with you guys. We started talking about tactics. What are some of those specific tactics or campaigns that you've prioritized?
For us, it's a lot of checking. It's cross sell and upsell. And it's all the time. We don't have all of our members' relationships, and obviously the opportunity assessment identified that. We did an acquisition, a couple of acquisition efforts back in 23. We didn't do it in 24 for budget reasons, but we're back doing that in 25, trying to acquire some new members. But it really is, and the results are incredibly consistent because people have capacity, but there's, the propensity isn't always there, right? And so, it's like every quarter we get, consistent results, and that's just been really helpful for the bottom line.
And
yeah, I feel like Bill and I are living in parallel universes. So we're doing a lot of the same. One of the things when we first started with Enfusion, we were, much different landscape. We were more focused on the loan side, and then things changed and we became focused on deposits as well. But we were kind of alternating back and forth between the two on our cross sell. And so this year we transitioned to the always on on the deposit side to be more strategic in that. Again, the opportunity assessment was showing the opportunity there with funding up balances. And so that's been helping drive those balances up, and we've seen success with it. A great piece is that you do get that updated tracking. You can see, within when you're in market, how things are doing. You can really lean into, like Bill said, the knowledge that they have from doing these campaigns with similar credit unions. And you can not spend your marketing dollars doing A/B testing. You can lean into that knowledge and incorporate it into your first round. And so consistent results. And I believe that a lot of that has to do with the knowledge that they are able to draw off of.
I mean, we'd never be able to do this internally. What we're doing here. I mean, we just don't have the internal resources. We don't have the expertise, and the fact that, and I get comments all the time from our board and from people in the community about how much they see, our advertising, and it's not the advertising, it's the targeted direct marketing that we're doing. And it is a lot more than we ever could do by ourselves.
yeah, and of course the insights they're fantastic, kind of cross-pollinating, but anything kind of in particular pop out on insights learned from tracking or from those conversations that have led to refinements?
So for us, we I want to say, I think it was so this last round, we shifted from just pushing a certificate message to a savings solution. And so we offered multiple products and have seen that performing really well because, you know, as rates haven't come down as fast as we thought they were going to, but they have come down. And so, you know, our individuals now more open to moving that money back into money markets or high yield savings. So it is liquid. And so just making sure we capture it no matter where it goes, making sure that they're aware of what options we do have.
Yeah, and I think we've found, you know, we've got, you know, chases in our market, you know, with, you know, get up to $900 for a new, you know, new account. We've got Citizens at $600. I mean, that's pretty, that, you know, and you wonder how bad their service has to be that you have to pay somebody $900 to try you. But you know, we're able to do something at a, you know, to get that nudge at a much lower level, right? You know, and we've tested 100, we've tested 150, and had significantly strong results. And you know, I think it goes to, you know, the credit union and kind of who our mission is and our brand. But I think one of the things we've found is it doesn't take a lot to get that person to act, where others are paying way too much because their proposition is so different.
Yeah, that makes a lot of sense. Well, and like you said, you're leaning into relevancy, right? You're tailoring the message to people that have, you know, whether or not they're members or prospects that have that that you're relevant to, and you're able to pay off the brand promise. So, cool. Want to make sure for those folks joining us on the webinar, if you have make sure if you have questions to the conversation, chat those or use the Q&A feature. Make sure we take yours as well. That was there. We got one. So the question, and maybe Bill and then Amber talk about this, but when doing these sign-up bonus checking account promotions, what is a reasonable attrition rate to target? How to get these folks to not leave after a few months?
And I guess I would say, you know, we haven't seen a lot of that attrition. We also haven't, you know, we've tried to make it simple to get, but it's also not a lot, right? I mean, we're trying to balance that it's not a windfall, you know, if you open an account. So I think that helps limit the attrition. Is that it's a reasonable amount. We wait a reasonable period of time. I think it's 90 days before we pay it. I think the branches, we have a good onboarding program. So I don't think, you know, I don't have a number, but I feel pretty confident that attrition rate is probably no higher than our normal attrition rate is.
Yeah, and I would say same for us. We are also pretty conservative. I think the max we've ever done was 200, but we're generally around the 150. We do, to get that, we do require direct deposit. And so, you know, it does limit then those folks that are just chasing a bonus. It's not worth it for them to even open it. So yeah, similar to Bill, I don't have attrition just for that specific segment that we've done with the account open bonuses, but I would suspect it falls in line with our overall account attrition as well.
Yeah. Yeah, and when clients have studied that, even independently, that's what they report. They report the same. The attrition is in line with the sort of non-incentive, and part of that is the specifically targeted nature, right? So like you guys both said, you're reaching a specific audience. It's not just kind of a broad, you know, open it up to anybody. I think this is one of the sort of the dangers of doing search engine marketing for prospect acquisition is if you optimize for search, then the gamers are the ones that are out there searching, and that's a big difference between the targeted acquisition, right? So that's one. Great question. Other questions on the phone? Okay. Great. So Brian, can you explain more about what these opportunity assessments are? Are they only designed for new product launches? Yeah. So maybe, and that's a great question. Maybe Amber, could you describe the opportunity assessment? Um, what it is, some of the key contents.
Yeah, sure. So we send over pretty much a ton and ton of data over, and so then from there, it's really taking a look at our entire membership base and segmenting it out. Heavy focus on the high deposit households, as that's generally where you're going to have a lot of growth opportunity, making sure that the capacity, propensity, and awareness is there. And then taking the whole book of business, but also those very important segments and benchmarking it against the normative data. So looking at, I actually have one up. Looking at where we fall on, our different product types, from checking accounts, money market, CDs, our total compared to as far as penetration to membership, but also balances. Even on the loan side. It really looks at everything and gives you a really good comprehensive overall view and health of your membership base and the products that they have with you. Dan, you're really the expert on this. It's been a few months since I've gone through on what am I missing?
Sure. Bill, well, and I'll weigh in. Bill, anything to add from your?
Yeah, I mean, I think, Amber hit it, right? It looks at penetration, it looks at balances, and it helps you understand where you are relative to, a really large normative base, and where, comparatively the opportunities are. I think you can try to outsmart your common sense, but it's pretty simple if you stay disciplined.
Yeah. So I think just if I had to summarize it, it's, in short, we're at Enfusion ingesting a comprehensive data extract. It's actually fairly simple to do from the credit union's perspective, but it is comprehensive. It's an account extract. We then run it through a bunch of analysis to give those kind of insights, comparing, and peer based benchmarking can be very powerful to be actionable. And so that's one of the things, is just to emphasize, we don't just do analysis, and it's a great discussion. I think we found to be effective when you invest the time to have your stakeholders in the room to have that conversation around it. You just have the richer insight, but then we end with a specific, okay, so what do you do about it? It's not just there are other providers out there that do peer comparisons. I think the key part about the Enfusion difference is it's a specific set of prioritized recommendations on how do you actually monetize those opportunities.
Yeah, and a good kind of microcosm of all of that, what all three of you just said, is one of the kind of foundational views of the data in the assessment, which is deposit concentration. So that table has a macro kind of portfolio view where we stratify the level of deposits held by different tiers of depositors. How many of those are there? What percentage of deposits they control? So you may see 4% of your households control 65% of your deposits, or something like that. But then integrating that sort of macro view with relational metrics, and then within each of those tiers, what percentage have checking? What's their average balance? What percentage outside of the share account only have one service with you? What percentage also have credit that serves as an anchor on the deposit? And then by bringing together that portfolio balance sheet view with a relational view, it allows you to do that prioritization and prioritize your tactics, as Dan just indicated. So you get alignment between retention priorities and cross-sell opportunities. So in your very highest deposit tiers, you'll find segments where I don't have their checking, but they control a disproportionate share of deposits. So it's really critical to retain them. And if I can get their checking, it'll be a high balance account that'll be disproportionately profitable. So anytime I can align a priority retention focus with a disproportionately profitable cross-sell opportunity, I want to prioritize that investment every day of the week. So that's a good kind of microcosm of what Amber and Bill and Dan just described.
But
And I would just add one.
go ahead.
Oh, go ahead. No, go ahead, Bill.
I was just going to say, I think, it's probably, I'm looking at one here. I don't know, it's, 35, 40 page assessment, but the real value comes from, being able to have, the infusion folks really talk about it and what it means and what they've seen and how to put it to work. In a, with at our place, an audience of the CFO, the CEO, where it adds a tremendous amount of credibility to the data. And instead of just sorting through it, you can really cut to the chase of what the most important, meaningful things are.
Yeah, and really gives them buy-in to how those marketing dollars are being spent, right? Like they kind of are taken on the journey of why it's important, who you're targeting, and then the action you're taking, and then a proposed ROI on that. So yeah, I totally agree. It's huge value. I would also say one piece that is interesting, right, too, is there's probably a lot of areas where you'll find that you're scoring really well and over the normative data. And that's always a great takeaway as well, and something to celebrate. And so, while internally maybe the discussion is, to push for this, we need more of this, we need more of that. But then when you look at the data and you're like, well, we're actually doing very well there, whenever, maybe just the internal dialogue is that we are not. And so it really helps to level set and to have more strategic conversations and not just go off of gut and what people think or feel. So I've found huge value in it. And because it is such great value, having those other key stakeholders involved just really amplifies it.
Yeah, thanks for saying that. And so I threw up a slide that we actually had planned for the closing, which we're not that far off. But if and it gives you a couple of visual examples on this slide of some of the benchmarking that has been touched on, all towards the goal of opportunities. And so, we'll follow up with you to see if there's an opportunity, if you're interested in discussing more about how to do that opportunity assessment. But then if you want to even reach out in the interim, we've got some contact information. We have one more question. Thoughts on CD specials? Bill, do you want to take that one?
Sure, we'll start. Well, the first thing is we don't do new money specials. Just philosophically, we don't think we should pay more to a non-member than we do to our current members. So we don't do kind of new money specials. But we have done short-term specials that require a checking account, that require some commitment. It doesn't have to be direct deposit, but we try to get the checking at least with it. But we don't stray too far from, we're probably in the top 20%, top 25%, but we're never going to lead the market with a CD special because we just know those folks are going to disappear to the next CD special someplace else, and we're trying to get a little bit more commitment.
Amber?
Yeah, and so we're the same. We don't want the hot money. We don't want to encourage the hot money. And so that's where we have actually tied direct deposit to getting our special rate. You can still get that same term. It's just at a lower rate if you don't have direct deposit.
And I think to emphasize something that both of you said is by leaning into the data and focusing on kind of sustainable member growth, you're not pricing to sort of top of the market. So even though as you adjust your pricing, whether or not it's relationship based or not, you're constantly thinking about what's a good rate, not at top of the market to avoid that chasing that hot money. But that does require being always on, right? If we're not going to have those big bursts of money, that plays to the data driven kind of always on and methodical approach.
Just blocking and tackling every day.
Well, cool. So we are drawing towards the end of our scheduled time. I want to be respectful of folks' time. And so as we wrap up, we'll do one more poll. We'd love to hear from every participant on just what you found most valuable in this session. And so I'll get that teed up here. And as we wrap up, but then just to emphasize, if you want to explore the opportunity assessment and the process that Amber and Bill just talked through, we'd love to follow up with you and reach out and discuss. We can set up a short call and discuss that. In the interim, if you wanted to reach out directly to either Trevor Knott, our head of business development, or myself, our contact information is right there on the screen. And so, yeah, thanks so much for the feedback already. Starting to roll.
And Dan, I guess I would just say if people have any questions or kind of want a client's perspective, I'd certainly be happy to, provide, our thoughts on it.
Yeah, same for me as well.
Awesome. Okay. Yeah, fantastic. And so, yeah, if you want to talk to Amber or Bill, just reach out to us and we'll provide an introduction. So thank you for offering that. Yeah, and as we wrap up, please do take that final poll. Thank you, everybody. Have a great weekend.
Thanks, Amber. Thanks, Bill. Thanks, everybody.
Bye, thank you.
Take care.
Thanks, Bill.
Is that a wrap?
That's a wrap.
All right. See you later. Hope that was good.
It was great. Thank you.
All right. Take care.